Josh Brown's best stocks in the market list wants to talk about three. No new additions today, but you have flagged three, I would assume, for a specific reason.
Yeah, so we took a look at the cheapest stocks that are on the best stocks in the market list because over the last, let's call it 2 weeks, but really accelerating since Friday, there's been this rotation into value. We do tend to talk about higher price stocks just because those tend to be the better companies because the market's not stupid. But in this case, we'll talk about some cheap ones. The first one is O'Reilly. As you mentioned in the tease, this is one of the best long-term charts I think I've ever seen. It's basically very basic. It's auto parts, so it's not AI, but it's substantially cheaper than it ought to be, given how well they've executed. And what's happening here is it's a cannibal company. It's eating itself. They have bought back about $26 billion worth of stock since 2011. They continue to shrink the float while growing earnings, and you can see the success for yourself. These are the types of stocks that really started to move on the heels of Jackson Hole in a way that they haven't in a long time, Scott. They've been left out of this market. I like this name, and as a long-term risk management tool, I would be using a 50-week moving average. Right now, it's about 86. If it violates and stays below, it tells you that something has changed with the way the buyers feel about this name. I'll do the other three much more quickly. Synchrony Financial is SYF. This is credit cards, ultra low PE, 8.5 times earnings. The bears would say with good reason. I like a low volume pullback in this name to about 70. I'd pull the trigger right there, but it has already broken out. I want to retest. HIG is the Hartford Insurance Group. Same story, value stock, 11.5 times earnings. I think you want to own it above the 130 level. That's where it's really looking for a new range higher. And lastly is Allstate. When was the last time we talked about this name on the show? 9.6 times earnings. Repeated failure. Give me a one-year chart. Repeated failure to get above 215. If it can take that level out convincingly on good volume, I don't know if there's anyone else left to sell. So I would wait for that breakout, but I think it's very likely.